Are your existing solutions able to take advantage of real threat intelligence? Common solutions like firewalls weren't designed to handle the massive and growing volume of threat indicators. This challenge often results in significant gaps in your protections, even when you think you have it covered. You need to protect yourself by filtering network traffic against unique threat indicators in a way that allows you to act. Polywall by Bandora Systems is the solution that filters over 10 million indicators right out of the box. Developed in partnership with the Department of Defense, Polywall is affordable for companies of all sizes. Get your free trial today at bandorasystems.com. Rapid7 powers the practice of SecOps. Using shared data, analytics, and automated workflows, SecOps unites IT, DevOps, and security teams to make security an outcome of innovation. Rapid7 combines technology, expertise, and advocacy to drive vulnerability management, application security, incident detection, and log management for more than 7,000 organizations worldwide. Power up your SecOps practice with a free trial at rapid7.com/securityweekly. Skeleton keys, golden tickets, forged packs, DC Sync, DC Shadow. The Active Directory attack surface is expanding faster than admins can keep up with. Securing your environment begins with implementing least privilege administrative models, but does not end there. Many organizations send Active Directory syslog events to a SIM platform. However, logs are noisy, of limited scope, and are time-consuming to review and act upon. Active Directory is secure when it's clean, understood, configured properly, monitored closely, and controlled tightly. StealthBits technologies provide solutions that monitor, secure, and detect the latest threats against Active Directory. Visit them today at stealthbits.com to learn more. Welcome back, everyone, to Business Security Weekly. I'm here with Matt Alderman, and we're going to talk about some of the security innovations and company announcements, starting off with, of course, Tenable's recent IPO, which happened last Thursday. Now, what's interesting, Matt, we're just talking about marketing. On CNBC, they say cyber risk management company Tenable. I think they meant to say cyber exposure company Tenable, which was in their marketing at the NASDAQ stock exchange when they opened up.
Yes, exactly. If you saw some of the articles leading up to the IPO, it said Tenable, the so-called cyber exposure company. And then in this article, they don't call them the cyber exposure company; they call them the cyber risk company, which is a little interesting. But look, at the end of the day, it was a good IPO.
Absolutely.
For anybody tracking security IPOs, look, it's a little higher than I thought it would be, but it's in the range. And
Yeah,
let
now,
me
Matt,
tell you kind of
wanna-
my evaluation for that at some point. Yeah.
Well, a little background first. So when they talk about the company's market value, you call that something different, their market cap. And there was a debate, was it $2.5 billion or $3 billion? What does that mean?
Yeah, so there's a couple things. So in the S1, it talks about the market size and the overall addressable market areas, right? Which they were saying was somewhere around 5 billion or something like that. And then when the stock comes out, based on its price and its number of outstanding shares, it has a market capitalization. What is the company worth with all the shares at the current price point, right?
Yep.
And so if you look at comps for Tenable, you have to look at Qualys and Rapid7.
Mm-hmm.
They are the other two in the core space, right?
It's like when you buy a house, you look at comps, right? What is everyone else selling for in the same neighborhood?
Yeah, exactly right. And so Qualys is running right around $3.5 billion market capitalization. Their stock has been on a tear lately. I mean, it was over 95 at the IPO. I think it's pulled back a little bit as the market the past couple days, late last week, pulled back a bit.
Yeah.
But it was up in the like 97, 98 at one time.
I was shocked. And I don't follow the market.
Price.
I mean, I follow some of the security companies just because we're following the industry as a whole. And I remember Qualys pretty much always trading around that $30 a share. And then at some point, it was trading around $45. And it seemed to be a lot of people who had Qualys stock were really happy about that. And then when I checked on it around Tenable's IPO time, it was like at 96 or 97. I'm like, well, that's like almost double where it was before. I'm like, wow.
Yeah, it's been on a great performance. And it put the capitalization of Qualys at $3.5 billion. Okay, so that's one point. The second point you have to look at is Rapid7. Now, Rapid7 stock's done very well over the last year as well. I think it's up 70% this year. But its market cap is about $1.5 billion. Okay, so it's 2 billion less
Mm-hmm.
than Qualys. And if you look at a number of factors, by the way, you look at revenue, you look at growth, you look at profitability, their market capitalization is less. Now, if you looked at the S1 from Tenable, the logical expectation is Qualys comes in between Rapid7 and Qualys. Tenable has more revenue than Rapid7,
Mm-hmm.
not quite as much as Qualys. It has a higher growth rate,
I'm
over
sorry.
40%, almost.
Tenable comes in between Rapid7 and Qualys in terms of market cap.
Qualys.
Yeah. Okay.
Yeah, market cap, right?
Mm-hmm.
Um, Tenable's revenue's higher, their growth rates are higher, they're not profitable yet. So I never expected them to be a $3 billion plus market cap. They
Mm-hmm.
did when they first came out at when the stock first came out at like 33 or whatever it came out at, it
Mm-hmm.
put them in that 3 billion range. It pulled back. They're sitting at about 2.7 right now,
Mm-hmm.
I think is the number. That's about right.
Mm.
They my guess was they would be around 2.5 billion market cap. That's kind of a logical place for them. I saw articles this morning that they're a little undervalued, so you could see some more uptick in the stock. It'll be interesting to watch as a shareholder. I'm interested
Well, now
to see
the
how
advice
it
that I got
performs.
was to not watch. Like for the
Yeah,
first,
well,
90, 180 days, everyone's like, just don't watch. You're just going to drive yourself nuts. And I'm like, I can't not watch. Like this is exciting.
right. I mean, it's exciting, right? I mean, how many people? So I watched the Qualys IPO because I Qualys stock as well.
Mm-hmm.
Um, this is my second IPO,
Mm.
and it was a great day for anybody holding Tenable stock. I think it was a really good valuation. Definitely in line, actually a little more than my expectations were, to be honest. Um, can it maintain? So now it's up to the company to continue to deliver
Mm-hmm.
on, growth, sales growth, bookings growth, revenue growth, etc. They will have to have a plan to get to profitability. I think the reason Qualys, even though it's a slower growing company,
Mm-hmm.
it has been profitable since day one.
Yeah.
It entered the market profitable. That company has been profitable from day
Mm-hmm.
one, and that gives it a higher market cap than its competitors. And I think that continues
Mm-hmm.
until Tenable shows some signs of profitability. If they can get profitable, I think they could see their market caps go above Qualys at some point, primarily because their growth rates are almost double, if not over double, what Qualys's are. So time will tell, but yeah, it was a great Thursday for a lot of people.
Now, Matt, those of us that are listening that are executives in cybersecurity today, how does the market aspect that we just discussed in vulnerability management, like how does that impact your solutions, where you buy, the decisions you make? Does it at all, or is this just a market conversation separate from a solutions conversation?
Yeah, they're a little bit different in that the market's looking at a company more from a financial perspective.
Mm-hmm.
They're looking at things like revenue, profitability, growth, etc. And each market's going to be analyzed a little bit differently, based on its technology,
Mm-hmm.
right? So cloud-based companies and software-based companies are going to see a higher valuation, for example, than a hardware-based company. So it does play into the markets when it comes to valuation, but there are just core things that the market's always going to look at, regardless of your product or your solution, for example, right?
Mm-hmm.
So that's why you got to look at your closest comps and say, what's realistic? In this case, it hit reality, which was good.
So congratulations to Tenable. I think it's awesome. It's awesome to be, have been part of that, journey in my time working there. And, they were a big sponsor of the show. So it's exciting, for everyone, and also exciting that it was all positive, for Tenable, in the community. I think it's cool. It's awesome.
Yep,
Now,
it was a great day.
Now, Matt, what I think is interesting is when we talk about CA Technologies, it is one of the largest acquisitions I think we've ever discussed here on the Security Network. They're talking about being acquired by Broadcom for something like $14 billion, I think was the number. And I put an article.
Oh,
Was it
19.
19? Okay.
Yeah, 19.2 or something like that. Yeah.
That went up. It was 18.8 something. Now, what's interesting is the article, and I want to get your take on this, Matt, is that the some bank, Amalgamated Bank, has $1.4 million in holdings in CA, and they've raised their position in the shares of CA. Is that because they could be acquired, which means their shares in the company will go up in value? Is that pretty much what's going on here?
Yeah, so if you look at the CA numbers, I looked at them briefly before the show.
Mm-hmm.
They're sitting just under a $19 billion market cap. And so when Broadcom put in the offer for them, it was 18.9 or something
Mm-hmm.
like that. So if the stock was under that price point, then by buying more shares at a lower price, you potentially make more money when that transaction goes down because Broadcom's going to buy at a higher price point. So when you see an acquisition like this, a public company, the same thing happened when Dell bought EMC, by the way,
Yeah.
way
Okay.
a few years
Mm-hmm.
back. Okay, you looked at what Dell was going to pay price per share, and you looked at it and said, "Oh, well, it's at 20. It's going to sell for 23 or whatever. I can make $3 more per share."
Yeah.
Right? So everybody's going to make some short-term moves.
Mm-hmm.
Those moves typically happen within the first 24 to 48 hours of an announcement, and then things will kind of settle out. They'll wait for the transaction to happen. Everybody will cash out. So that's why the bank probably did it. They had some upside
Right.
in the stock price that they could buy some more, make a little more money as part of the acquisition.
And so this acquisition sounds like it's going to take place then.
Yeah, I mean, there's a due diligence. So with every announcement like this, there's a
Mm-hmm.
process. There's the due
Sure.
diligence process, technology, business. There's structures and things that go through. They've probably done a good chunk of that already. There's probably been a good level of due diligence already done, and now it's the process of closing everything,
Mm-hmm.
clearing funds, et cetera. That takes some time. And Broadcom was, I think the reason they went after CA is because they got some regulatory restrictions on buying Qualcomm, I think.
Hmm.
They were trying to buy another chip manufacturer, and the regulator said, too big of a monopoly or something
Right.
like that. So they ended up switching. The regulators could still get involved, right? So an acquisition like this
Sure.
could invoke either EU or US or Asian regulators to look
Mm-hmm.
at the deal and the structure of the deal to decide whether they're going to allow it to go through.
Mm-hmm.
Some deals have been killed by regulators. I don't know that that's the case here because it's a hardware company buying predominantly a software company.
Yeah, CA
So
is
I don't
just
think
software, right? I don't know if they have any subsidiaries that do any kind of hardware. To my knowledge, it's just software. But again, we
I
only
think it's
cover
all
the
software.
and we only cover the
Yeah,
usually the
security
security side, yeah, which is all software, as far as I know.
Yeah.
Yeah.
Yep.
That's interesting. We'll see how that plays out. Now, what's interesting in other acquisitions, Imperva is going to acquire the DevOps security leader. Of course, that's how they always put it in the headlines. Prevoty.
Yeah, I noticed the headline too, so I went to Prevoty's website and I go, wait, they're a runtime application self-protection vendor. How does that make them the DevOps security leader? I'm not quite sure, but they do lead. They are the only leader in the runtime application security protection space, so I'll give them that one. DevOps security leader, that's a little bit of a stretch, but look, it's an interesting acquisition by Imperva for a couple things. And I think we've got some numbers on Imperva's financials. They're slowing down their growth. They're a web app firewall. They were originally very hardware centric. They've needed to make some strategic moves. This move is, I think, a pretty good move for them. It stays in their core buyer persona of the application side.
Mm-hmm.
It's moving them into some newer technologies. In runtime application self-protection. I think it's a growing market. It will continue to grow. So I think it's a wise move by Imperva because it stays in their core buyer persona, should be an easy upsell to their existing customers. It's a growing space as DevOps and containerization take off. I don't know that that's the end-all, be-all container security play, though. RAFs have some limitations in the containers, too, so I'm not sure that it's all the way there, but it's a good first move, and it would be interesting to see if they make others in this space.
Yeah, see, I see it less from the market side and more from the consumer or the buyer side, and the trend that I notice is many organizations leaving their Imperva traditional WAFs for newer technology, such as RAS, such as the next generation WAFs that we, Signal Sciences, for example, is a sponsor of the show, and other leaders in that, newer leaders and innovative technology companies in that application protection space. I see them leaving Imperva. And when I saw the announcement that Imperva was financially taking a bit of a dip, it kind of made sense to what I was hearing from the buyers.
Yeah, I've seen them migrating. So you got the next gen guys like Signal Sciences and ThreatX and a few of those guys,
Yep.
T-Cell, some others that are kind of this next generation WAF, but also to Amazon. You're losing web app firewalling to base Amazon services when you move up into Amazon Cloud, for example. Amazon has its own WAF, and it's literally a fraction of the cost of an Imperva device. So, I've also seen the cloud providers putting some strain on the web app firewall guys as well, especially if you're cloud based.
I've also noticed the same trend with Proofpoint. And again, Proofpoint could have fantastic technology. However, the trend that I'm noticing in the email phishing and spam gateway kind of arena or category, if you will, that Proofpoint is a lot of people are leaving Proofpoint and going to, again, some of these newer startups and newer companies that are providing the same level of service with some extra additional technology. I've seen some awesome technology in this space, Matt. Like installing the malware and hypervisors that run on the actual chipset and just doing some really cool stuff. And I think that's caused Proofpoint to lose some market share because people are like, I want the newer technology because it's going to be more efficient and more accurate and easier to deploy. I think is why they're losing market share. No?
Yeah, and you have the same thing going on here with like Mimecast and Office 365, right? It's a perfect kind of 1-2 combination. O365 in the cloud, Mimecast in the cloud, who's also a public company. A well-suited solution than going to something like Proofpoint, which is a little harder to install, a little older technology, etc. And here's what's interesting in the numbers. So if people want to understand how to read these silly things, right? I'll just pull out two interesting metrics out of the report. So total revenue, growing. Total revenue for second quarter was an increase of 40%, but bookings was only an increase of 35%. So if you understand how these numbers work, bookings are new revenue, new customers, and new logos. Revenue is what you can recognize after a deal. When bookings are less than revenue, that's a sign that revenue in the future will slow. So some interesting numbers there, right? Their GAAP numbers were okay. I think they still got a operating loss compared to last year. It seems to have gone up a little bit. Net income came down. So those are all kind of signs that things are slowing down, which aren't necessarily positive when you kind of dig into some of these numbers. So I agree with you. It'll be interesting to see what does Proofpoint do something strategic to help it continue to grow, because it's hitting some headwinds here.
Now, is the announcement from Sophos kind of similar? Or, this stock has been upgraded. Does that mean they're doing well?
Yeah, this stock's been upgraded. I didn't dig into all the numbers here because I haven't looked at their last report, but there's positive signs for Sophos. So the investors that track them have upgraded them. It's interesting. I don't, in the enterprise space, I don't see a lot of Sophos. I run Sophos on my Macs at home. So I see them more as a consumer play. So I don't really track Sophos as closely as I would others in this space, just because to me they're more consumer play. But if they're upgraded, that usually is positive signs. So we'll have to see. But I didn't dig into their financials to know.
Yeah, I put that alongside Carbon Black, and I thought the Carbon Black announcement read that they were also doing very well, and I was curious to see how the market was playing out in terms of those adopting those traditional antivirus companies versus switching to that newer technology, which is a segment John Stratton and I ran from a technical perspective, more of an enterprise perspective rather, on Enterprise Security Weekly. I was curious to see if the market was reacting in the same way, that Same thing we've talked about with like Proofpoint and Imperva, right? Are the newer players taking market share?
Yeah, so the actual results aren't released until August 7th.
Mm.
And I couldn't get an indication here whether they're going to be positive or not. There was an open lawsuit against Carbon Black shortly after IPO. So I'm waiting to see what the impact of that is. So
Mm-hmm.
when the results come out August 7th, which is right before
Mm-hmm.
it's actually the day we're all flying to Black Hat.
Yes.
Maybe something we could cover later. But it will be interesting to see their results with this kind of lawsuit out there. And I think the interesting thing to see here will, for Carbon Block, will be for companies like CrowdStrike, Cylance, who are both considering IPOs. Is, if Carbon Black, which had also a pretty good IPO, can hit a couple quarters of good numbers, then I think you could see CrowdStrike and Cylance, even Tanium's been talking about this for a
Mm-hmm.
while, of getting ready to come out from an IPO perspective. It would be interesting. So I know those three companies are probably watching this announcement on the 7th as well.
And that's what we've speculated as well. Just basically, given the amount of funding that those three companies you mentioned, Cylance, CrowdStrike, and Tanium, the amount of funding they've taken, like their exit at this point is pretty much IPO. I mean, the chances of a larger company purchasing them at this point, like who's left that doesn't already have something on the endpoint that significantly overlaps with the functionality of what they have, right?
Yeah, I mean, both CrowdStrike and Tanium were mentioned in the Tenable undervalue article this morning as
Mm-hmm.
potential near-term IPOs. So yes, that's the expectation by the market right now, is both of those guys will go IPO soon.
There was one last story. Oh, so this one, I don't know how it ended up as Fortinet at Black Hat, but Fortinet, among other companies, have made a series of announcements to go into Google Cloud and their technology supporting Google Cloud. There was a Google conference recently, Matt, about their cloud. I thought you might know, as Layered Insight is more closer to that space than actually than some of the companies that were mentioned. But like half a dozen companies all announced support for Google Cloud, I think in line with a Google event of some kind, right?
Yeah, so Google Next was last week.
Mm-hmm.
When I was in Singapore, Asif and a few of the other guys were tracking the Google Next announcements last week. And so, yeah, this is typical. You get a number of vendors that make announcements of supporting those technologies at their conferences, gets them some press.
Mm-hmm.
I mean, that's okay. The real interesting Google Next announcements were on some of the aspects of their edge computing play to compete with AWS's Greengrass,
Mm-hmm.
which is going to be Android based. That was a pretty interesting announcement. I haven't gone through them all yet because I was 14 hours ahead
Mm-hmm.
from a time zone perspective, and I haven't caught up on all my news yet. So I'm sure there are probably a couple other really good nuggets in that Google Next announcements last week. I just haven't gotten through them all yet.
Yeah, and I think to kind of round the show out, there is another story or two in there that we may not have covered. I'll leave that for your own reading. But when you're an executive today and you've got to make decisions, what do I put in Azure? What do I put in Google Cloud? What do I put in AWS? Is it all three? Do I pick one? Like what's I mean, we could do an entire show, I think, on just that. But I think that's a decision that many of us are faced with today, myself included. Where do you put your efforts, or and how much do you structure your application so that you're independent of those providers?
Yeah, and it's interesting also because everybody kind of went to AWS first, right?
Mm-hmm.
And they had a big chunk of the cloud market, especially for startups. But it's interesting as you're a startup or even established security company that's in the cloud, you get requests to be anything other than AWS sometimes.
Mm-hmm.
And that is because companies compete with AWS. So retailers are like, oh, I love your cloud solution, but I want it running in Azure or Google. I don't want it in AWS.
Mm-hmm.
And so as a security company, you have to think through, okay, what does that mean? How easily can I port what I built in AWS to these other environments? Because if you start to look at them now, a lot of functionality is there across all the three providers, I think,
Mm-hmm.
pretty much. Some more platform stuff in Azure, some some more advanced ML and analytics capabilities in Google, but all in all, they're the same. And the challenge that I think most early security companies make is they build to AWS, leveraging a lot of the AWS components because it speeds things up, but it also limits how portable they are later. And so now you see architecture decisions kind of backtracking a little bit to say, do I really want to embed all these AWS components in it if I have to move it? Because it makes that move to an Azure or to a Google potentially a little more difficult. So those are some of the decisions that have to be made when you're thinking about your cloud strategy. If you're all in on AWS, it doesn't matter. But if you want a multi-cloud strategy, then you really have to think about portability from an architecture perspective and what does that mean longer term. So those are just some of those decisions that people have to make.
Absolutely. Well, thank you, Matt, for helping us cover Business Security Weekly this week. Thank you, everyone, for listening and watching. We'll see you next time.